Good morning. Good morning. All right, so the market is open, and yeah, having a bit of a lot of technical issues this morning. So, but um, we're going to continue to move forward because hey, what else can we do? Let's see. So the market, we have a CPI today, obviously, and so now we've popped in, and the market has dropped a little bit lower. Um, because of this technical issues that I had, one of those things that I have to always be mindful of is any sort of distraction or disarray or disorderliness when it comes to your trading is always going to have a major effect. And how you respond to these things emotionally are going to always give you a little bit more or a little bit less clarity about which direction you want to go and how you want to do things. But this is what we are here for, right? This is the work. This is the job. Yesterday in the pre-market, let's not talk about stuff I guess that we haven't seen, but we're going to talk about what is right now. Right now, we just dropped right back into the Asian session high. So the low of this candle is the Asian session high. Below that is the London session high, which sits at about 21,959. So we had this opening range gap. We had the CPI news that pushed us up higher. Just as the market began to open, we dropped right back down into the range. We'll go to regular trading hours. We'll just take a look at what that gap may look like from this as the open to yesterday's close. So we've dropped roughly 50% of the range back, 50% of the 50% of that opening gap range. So we just dropped right back in, and I think we are just about to the London session high. Now I did not think that we would go lower than this level. This level is the event horizon between the Asian session high and the London session high. And I'm paper trading, so I feel that, I feel a little more what's the word I want to say? Liberal, I guess that you would say. I'm feeling a little more liberal because I'm paper trading right now. Now, have I where I've traded in my combine account, I may be a little bit more tense. But am watching out of the corner of my eye. I'm watching that level between the Asian session high and the London session high. We just tapped that event horizon, the 50% level of that range. Exactly. Now that we've touched that level, I'm watching to see whether or not we're going to press down through it. And this is the level that I'm describing. And I'll just pull this over so you can see it. I would do a lot of screen switching. So the green area is the London session high, London session. This is the Asian session. So there's a gap between this high and this high. And we came right down from the news on CPI. Sorry, the core inflation news and the inflation rate news. And we dropped right in and we touched that level exactly. And then we've been hovering at this point. So are we looking to take that level out to the low? Or are we looking for that level to offer support as for a movement back to the upside? Well, the only thing that we can do is we see that prior to the news, we just came all the way right back into the exact same levels that we were once the news was released, and we just tapped the high of that level again. We're back to that event horizon again, 5 minute candle. That's just a 5 minute candle over there. So 4 minutes and 11 seconds left. Okay, the low of this candle has just touched the high of the London session. We've come all the way back into the London session high. And why is that important? Well, that's important because we're showing that we're going toward liquidity pools. So if we have a liquidity pool, which is the London session high, we broke away from that level and then we returned to that level immediately. And right as the news happened, we ran out. Um, and made our news level highs. On the daily chart, this is our new day gap. The news, the core inflation news, made price rally. From that level, we dropped right back in exactly to the high of the new day gap. Okay, so those are two confluential areas, which means that we have two important areas of liquidities or PD arrays that would serve as significant areas for us to source for liquidity. Now we're going to see whether or not price shows in a reaction to it, and price did. We immediately kind of popped off from that level. I wanted to look at a lower time frame level because I wanted to see whether or not we broke market structure. To me, this isn't really a break of market structure. The ES isn't showing a break of market structure, so we haven't closed above this sort of a rally to the downside. We just basically broke even with this level. So we might expect a little bit of consolidation in the early moments of the New York session or the AM session. On this run to the downside, we um, we breached the Asian session high, the London session high, and then yesterday's PM session high. We are passing the PM session high at now. We just passed the PM session high, so we just dove down into the highs of two sessions. Also, the PM session high represent yesterday's high. So yesterday's high of day was the PM session high, and we broke above that. And after we broke above it, we turned over, broke down, dropped back in, and kind of addressed those areas. The price action has been really tricky for me because normally when I'll see an area like this, I would expect that there would be some sort of an immediate response to where we are in price. That price that we would hit a particular area and then rally from that. But what I am seeing now is that we are having much less um cooperation. Is that the word I want to use? Yeah, but Price doesn't necessarily want to cooperate with us the way that we think, and I've kind of tried to avoid the morning session because of the difficulty with the consolidations. And I've had some success with the Asian session. It's a slower price action. However, when the Asian session is in a narrow range, you'll look at the chart for 3 hours, 4 hours. The price won't move anywhere. It'll just continue to move back and forth. Oh. And then we'll see price delivery somewhere between the Asian session and the London session. And then the London session will offer probably a wider range consolidation and then really begin to accelerate after that point. But I don't think, oh, now we have a bit of a market structure shift here, right? So now what we're watching to see is this area, right? We're watching to see whether or not in this zone here, in this gap, we close high in that gap, as you can see, between the low of this wick and that candle, kind of close high. If we included this area here, then we are probably still in a discount. It's 9:40 a.m. There was a small imbalance in the lower time frame. We moved above these up close candles. We closed, 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 turned over, dropped right back into this imbalance. So why are we watching these things? We're watching these things because we're looking for imbalances that are presented as first presentation, right? And we are also looking to see whether or not these levels are offering directionality, right? So I'm watching for the consolidation to form, that we just begin to form a range and go back and forth in a range. So I'm not too excited about any particular direction. And also, I'm watching to see whether or not one particular set of PD arrays is holding consistently. So are we trending? And what direction are we trending in? Still working on that. Still working on that. Difficult sometimes to see that price is only going to go one direction. And people would think, well, no, that's not right. Well, sometimes, sometimes you have to keep your ego in check. After you have two or three good trades and you begin to kind of pocket some profits, um, it's one of those things where, yeah, it's really a real struggle. It's really a real struggle to manage the trader himself. I'm watching this candle particularly because we had this imbalance on the lower time frame here. Because of the P arrays that we already talked about, the Lune gap, the violation or the no, sorry, the breaching of the Asian session high and the London session high, and how we actually moved away from those areas with a little bit of energy. That's why I would particularly watch this area to see whether or not we would go back into the Asian session or the London session range. If we stayed out of those ranges, I would feel especially bullish. However, we aren't really showing a lot of energy to the upside from this area. Why are we being held here? Why are we holding here? Well, let's keep an eye on this 5 minute candle as well. We'll keep an eye on the 5 minute candle. Where is the 5 minute candle going to hold? I'm sorry, well, not where is it going to hold? Is it going to hold? Right? Are we going to close below this down close candle, giving us a very bearish strength signal? Mm, mm, mm. Okay, I'm watching this. This is what I'm watching now. I just want to see where the bodies are and whether or not those bodies are closing. Not where the wicks are, but where the bodies closing. Yeah. 38 seconds for the close of this 5 minute candle at 9:45 a.m., which would be the close of the first 15-minute candle of the day. That means we'll be 15 minutes in. Because of the news, my first instinct was that we would have some sort of immediate response to the news. That we would have more than this. That we would have had more than this sort of impulse to the upside. That it would carry a little bit more weight than that. So now, as we're watching these down close candles, I see how this body closed here, we closed here, we closed here. Now we've pressed down into this down close candle and we've closed down below this range. I was also watching the wick of this up close candle. It's represented on the 15. I don't think it's the exact same range. So I'll clean that up to see what the 15-minute range is. And this is the 15-minute of that. This is the range of that 15-minute wick. And we'll go back to the 5. And I'm not trying to incorporate too many elements into this process. I'm not trying to incorporate too many things into this process. I am really watching to see whether or not the pre-market news is going to have an effect overall on the day. And right now, it seems as if just to the moment that the news was released, which was 8:30. Where is 8:30? 8:30 is here. We returned right to the level that price was sitting, right? The price was sitting at 8:30, right as the news was released. And we dropped all the way below the low of the data candle. This is the candle in which the news was set. We took that low out, and this looks extremely bearish at this point. This looks bearish. So, if we were bearish, if we were bearish, the run for this up this range, the run of this range could apparently be manipulation. However, we still have this block of down close candles that prior to the news at 8 o'clock, we had both sides of this range sort of cleared. And I'm interested to see what happens in the range of this candle. We're back into the London session. Right now, we are at the consequent encroachment of the London session and the Asian session. So just here is 50% of the range from the from the London high to the Asian high. Does that make sense? Wrong. That's not what I was trying to say. Apparently I was attempting to say that if you combine the Asian session and the London session together, we are right in the middle of the overnight range. This is 50% of the overnight range, just at the consequent approaching of London. And there could possibly be a small imbalance right around that 730 area. 730, 730, 730. Right in this area right here. Mm, One of the things that I thought was very interesting about the last few days is every time we've made a high or made a new high, we've also had a complete sell-off. We can look back on like the 30-minute chart. We can look back on a 30-minute chart and we see this rally to the upside completely sold it off. Then we popped right back up, came right back into alignment with the prior price action model. Then we began to rise. And as we begin to rise, oh, wow, we took a new high. Then we dropped right back in. Clean some of this stuff up. Okay, so we dropped right back in to this range here. This was last night, not last night, but the prior night. After we rallied and took the high out, we completely turned over. Boom. Then as we moved back up, we took this high out, right back in. And this is the yesterday's AM session. Rallied, took this high out, turned over and dumped. Rallied overnight, took this high out, dropped all the way back in. Then this morning we ran up, took this high out, turned over and dropped right back in. So it's just one of those times where we see the market is moving up 1%. Well, it's moving up 2%, dropping back one. No, that would be halfway. That would be halfway. That's not quite exactly what's happening. Let's say we move up from here to here, down, and then up. Yeah, it's weird. It's just a weird sort of It's hard to describe, but it's just strange to describe. Okay, so now from the 50% level of the Asian session, we dropped right back in, and then we popped up. We're going to go to the lower time frame, the 5 minute, and we're still watching to see how we engage price here. I wanted to see what happened with the closes of these bodies. I was watching the wick of the 15-minute candle. I wanted to see where we closed on the wick of the 15-minute candle. And we dropped all the way down, but the bodies of the candles happen to be roughly around the middle of the wick of this candle. A lot of this price action is extremely volatile. Here we are at 9:50 a.m. Now on the 15-minute candle, just gauging the 50% level of this up close wick. We are above 50% of that. Now, this one candle dove down to the middle of the Asian and the London session, and then it returned. Now I'm looking for some support that would suggest that we would not um, tread this entire range. Like what? I'm looking for some level of support that says, no, you're not going to retread that entire range. We just did that. Okay, okay. 2 minutes and 23 seconds left on the 5. Pull it forward just a little bit. We'll go to regular trading. Drop down into the lows here. Popped up. Bam, boom, pop, bing, pop. Okay, let's see where this 5 minute candle goes. We're looking for a shift in the market structure. Hmm, This is a tremendous up close, right? Trade. Move back. Wrong one. Let's see. Actually, they look very similar. Just grading that opening range gap. That is a very slight close above that prior up close candle, but it's there. We'll need to watch and see how everything operates at this point. We turn over here. Okay. If we took this imbalance and pulled it forward, mm, I'm sorry, I'm on another screen. I just looked over there. I'm sorry, I looked off to another screen. And I'm watching this here, whether or not we find any type of support that suggests that we're going to continue higher. Again, on the 15-minute, we graded that wick, and this 15-minute candle ran all of the lows out, and then we returned to this level. However, I would love to see us close above this 50% level and then begin to look for some support. 4 minutes and 41 seconds left on the 15-minute chart. Here on the 5, we've turned over on that 50% level. Let's watch. Here to here. This point, I'm not expecting high resistance. (9:56 a.m.). Mm-mm, mm-mm. What I've been keeping mental note of, the thing I've been keeping mental note of is when we leave the Asian session and the London session. When we leave the Asian session and the London session, this is a thing I'm mentally keeping track of. All right. So if we grade Asia, okay, we grade Asia. There's a higher time frame or older time frame Asian session back here. And I keep track of them because when we enter consolidations, normally what we're doing is we're rallying to these levels, to these levels, and then back to these levels, these levels. So we're incorporating all of these significant higher time frame levels. Now we've just moved above this Asian session high, and then we have yesterday's PM session high here. And I want to see whether or not we're able to close above this level and hold. Can we get above this level and hold? And if we can, then what does that say? That says that price is stair stepping through the ranges. So in the Asian session, we took out, this is the Asian session low that formed during its session. After its session, we took that range out, popped up just a little bit, dropped down, held this level, which formed the London session low. The London session range trades to this level, right into this up close candle and holds. Then we drop down, small imbalance. We trade lower. We trade back toward the low of the London session. We don't take out the low of the London session here. We do, however, take out the consequent encroachment, the 50% level. Then we rally. Prior to the news, we drop down, right down into this range. Here's the Asian session low. We retested it here. We traded back into it here. And then we begin to stair step our way out of the sessions. We have news. News rallies us out. Then we trade back in because this is all pre-market action. And normally in the AM session, we often see the pre-market action echoed, right? Whatever the run was in the pre-market, normally if we're in tight proximity, then we'll see the AM session repeat that level, repeat all that price action. That's why we have us drawing back in below consequent encroachment of the London session and the Asian session. Then here we are at the high of London. Here we are at the high of Asia. Now I would love to see us go up above yesterday's PM session high or the high of yesterday's trading range and then find support there for a move to the upside. Because we have these bodies closing here and we also have let's go to the 15-minute chart. We've also dropped all the way into this range, and this 15-minute candle has closed bullish. So maybe we'll turn over and drop back in, but what we really want to see is a press up through this level into something like this zone, trade into the possibly the consequent encroachment first, dropping out for the high of the PM session, and then pressing higher. So we have this Asian session from Tuesday morning's Asian session, when we pulled that sort of forward, and then we graded it. And so in this upper quarter level, we see that these two prices are sitting right on the high of excuse me, of the Asian session, but we just made a brief rundown below, right below that quarter, and it lines up with these levels. Also, it lines up with the lunch rate high at this area. Because all of these significant highs are all in alignment, then those are kind of confluential to me. And then here we have the dollar index. We traded up in sort of this imbalance on the dollar index, closing, bodies closing here on 50% of that range and then rolling over. So if the dollar index continues to the downside, and then the equities, the indices continue to the upside, then that would be another level of confluence. Okay, so here it seems that we do have um, a level of resistance going on here that I really thought was going to be. I thought really thought that we were going to uh, hit this imbalance and then pop right back up, and then because of the news that we were going to have a strong push through this range. 15-minute chart. There's the imbalance that we were watching on the 15 on the other side over there. Just kind of clean that up just a little bit. I just really want to see us get through this. That would be fun. If we reject here, I mean, we could possibly reject because of this sort of a V-shaped body here, right? Excuse me. What I really would hope to see was because of all of the pre-market price action in the news, I would really hope to see that as what would you call it? A balanced price range? That because we had this full pass to the downside and this full pass up, that price would no longer need to engage down here, and then we would move higher. But that's really far outside speculation at this point. Okay, so now we're at yesterday's this level. Let me see, when I say this level, I have to be very specific. The high of let's see, right around here, this level is yesterday's high. So we rallied above yesterday's high. We popped right back, we're right above it on news. We drop back in. We have an impulse into the overnight sessions. Now we're having resistance at the prior day high. Um, yeah. This as far as my analysis is concerned, everything says to me that we ran liquidity from the prior session and we should move higher at this point. That is my analysis right now. However, what could I be missing? Right? What could I be missing? Well, Gray, you could be missing the idea that we took out prior day high, right? So you just said that we took out prior day high, so we already have that in alignment. True. We had news. True. We had this consolidation here. True. We've had price breakdown consecutively for 15, 30, 45 hour down into this range. This could very well be just a pop up into what we could consider first presentation fair value gap. We could hit consequent encroachment of that level and then sell off to the downside. That would be the opposing analysis. Why don't I feel very what's the word? And I don't feel very confident about that is because what I just noted was basically one PD array. One PD array was the only thing that I had to say, oh yeah, I think that might be possible. And on the opposing side, we had multiple PD arrays that are all kind of in alignment with a rejection of those levels and support being offered there. Okay, so right now is a waiting game, right? It is a waiting game. It is 10 a.m., 4 minutes for the macro to be fully complete. 10 minutes before, 10 minutes after the hour. Let's take a look at the hourly chart. Okay, let's take a quick look at the hourly chart. Okay. On the hourly chart, we've been breaking highs, trading back in, tested the low of this down close candle. Once we swept the low of this down close candle, we rallied, broke market structure, traded back in. This is the news candles. We popped up. As we see here, we turned over, we dropped back in. This candle comes back, retest the closing price of this down close candle, immediate rejection. Now, this hourly candle, which is 10 a.m., basically has opened at the low of this prior down close candle with a slight impulse down below its close, and then subtle, subtle push to the upside. If this hourly time frame, if the hourly time frame price action continues, right, then the assumption at this point would be that we would see higher prices. Now, for me, the issue is when, right? Those are the issues that I always have. When are we going to see higher prices? Are we going to see higher prices immediately, or are we going to watch for two or three consolidation periods for price to um, come together? I know what you're thinking, bro. I can't see crap. What are we looking at here? Sorry about that. We're on the hourly chart. So roughly we're flat with the closing price of the prior down close candle. This represented the 15-minute wick. The 50% of that wick and the middle of this imbalance are in alignment. We're watching those areas where price has gravitated toward. If price has gravitated toward that area, then price is suggesting to us that it has some significance, either bullishly or bearishly. 9 minutes after 10 a.m. Okay, slight push to the upside. No continuation yet. No continuation just yet. Slight movement to the upside. So now we're at that consequent encroachment area that we discussed. What we wanted to see was a slight test of the consequent encroachment, then a pullback, and then a push through. Because everything happened pre-market, I think mentally my target, if I were to put a target in here, put a target on all of this, would be the pre-market highs, right? That we had the news rallied on massive volatility. Then the market calculates for that, it counts for it, almost like it erases it, brings us right back to where we were just prior to news, and then begins to run that same range. It'd be great to see that if my analysis is in alignment with that, because that's basically the way my model works. Is I'm using the Asian session high low high the Asian session yeah. Excuse me. I am using the grading of the pre-market ranges to determine whether or not we've hit significant liquidity areas of liquidity. We're at the consequent encroachment. We tapped it once. This is our third time here at this point. You probably can't see because I'm so zoomed out. We have the 5 minute. We're looking at the hourly. We're going to bring the hourly down. Why we look at the hourly? Because we swept the lows, and on the hourly time frame, we've dropped down to the down close candles here and rallied away. We've had one impulse to the downside with this wick dropping in, which kind of satisfied that liquidity run, or what we would imagine a liquidity run would look like on the higher time frame. Then price has turned over, and what we want to see is we want to see us take out these highs, and we want to see price kind of get a little looser as it moves to the upside. But trading through this area is going to be what I like to think of as the area, because this was the first imbalance that we had, and I'm using the inversion gap color here because and keeping in mind that we could just trade up to it, hit consequent encroachment, trade to the high, trade out, trade back in, trade back to the consequent encroachment of this area, and then begin to move to the downside. So those are the ideas and areas that I'm watching right now to what to validate or invalidate this area. To validate or invalidate this area. So what else are we keeping in mind? We're also keeping in mind this range. Why? Because we could watch this range to say we created it, we traded into it, consolidated, breached it. As we returned, we ran 50% of that level, dropped down, went up above 50% of this range, traded back in, and then we could trade higher, as if we were inverting, as if this was an inversion. It just gave us an opportunity to run out the liquidity from the pre-market, tap into it, and then give us the opportunity to push higher. Okay, so far, what we were watching for has basically happened. The first area that gave us sensitivity was the gap between the Asian session high and the London session high. The second area that gave us sensitivity, which was significant areas, was what? It was the gap between the consequent encroachment of Asia and the consequent encroachment of London, along with its alignment with the high of yesterday's lunch rate. So all three of those areas were very close, tight proximity here, here. So that was the first area. So we have the low, lower low, right? So we have a low, liquidity, took out that low, lower low, movement to the upside, impulse to the upside, drop back in. Now we're pulling away. Well, now we've risen from that point. Pulling away is um premature. So we've turned over in that gap. Now we're retesting the consequent encroachment. Excuse me. True target though. When I say true target, I mean the place to where I am looking for my bullish sentiment to be validated is literally a movement above this area. We press above, trade back in. We could probably consolidate along this area for a while, but holding this range and holding a range above this area and then a gradual movement to the upside. Very nice, very nice. So what area would I be looking for if I wanted to take an entry? The areas that I was looking for my entry have to do with those pre-market ranges. Once we leave that area and it's an ungraded zone, I have difficulty following along with price sometimes. I'll definitely need to work on that in the future. But let me show you this very quickly. And we talked about the PM session from yesterday, right? The high of yesterday, that PM session. That's going to be represented by this white line. If we look at the 1 minute chart, as we moved above this level, finally, we turned right over, dropped down, and we tapped that level before we made a slight movement through this range. So those session highs and lows, pre-market, daily highs and lows, in the proper context, are very good guides to kind of show us what price could or possibly might do. And then I'll outline this. Let me see. I don't want to get rid of that just yet because this is also that Asian session high. As we traded right to it, we closed on it, closed on it. Wick, last wick is right on this Asian session high. And then we moved up. And as we saw in the 1 minute, as we passed this range, we touched it and then we moved up again. And then the other area that I wanted to keep a close eye on was this is the consequent encroachment of Asia. And this is the PM session. This is the consequent encroachment of London. There. So roughly right in this area. And then there's an imbalance right there, just below those two levels. And that's the type of area that I would want to target. But I'm still working out this model because there are rules to this that I haven't quite understood yet and paid the price. I thought, because when I see this type of clarity, I think I've got it. Like, oh yeah, I've got it, I've got it, I've got it. You know, take along off the highs, right? Take along off the, and it's not that simple. It's not that simple. I'm also looking for clusters of down closed candles to represent the bullish order block, right? Without that, I'm looking up here for entries, but I have all these down closed candles here, right? The same here. If I'm targeting the lows of London and Asia, I am looking for the lowest down closed candle in the overall range. Take that, pull it forward. And not because of this not because of this down closed candle per se itself, but also because of this imbalance, right? This imbalance, because of we're below the what do you call this? The consequent encroachment of this session, the lunch rate, this imbalance, this down closed candle respecting this wick in, this body, this down closed candle respecting this candle, trade back in alignment with these levels, trade away. And now this is that push away that we were hoping to see as far as just a crazy, uncontrollable rally to the upside. If you're long from here, then you will probably be going to the sidelines by this point because we'll go ahead and that's that's a nice many people will be extremely happy about that. Just saying, oh, I'm waiting for a price to come into the confluence between uh um Asian session low and the London session low, right? Right in alignment with this bullish order block with a small imbalance. Price traded past that. Yeah, but it was that pre-market, right? It was the pre-market price action. And then when we come into the day, into the AM session, the AM session often just retraces those levels. Boom, pops back up. And at this point, the first thing that I'm thinking is consolidation. That's the first thing came to my mind, right? That there's this rally off from 945, 950. This is the macro, right? I'm thinking, oh wow, that's a nice range. Wait, rocket ship. Now I'm thinking, yeah, consolidation. maybe move higher, but also consolidation. So that's all I have for today. Thank you guys for hanging out with me and listening to me. If you caught this, to watch me kind of explain my angst, explain my struggle here. Um, guys, hey, this is a hard road, and I hear a lot of traders say these types of things, and I hear a lot of people complain about these types of things. This is a hard road, but um, hey, keep your head up if you're in this trading. If you're in this trading industry, keep your head up. It's very difficult sometimes to um attempt to improve, try to move forward when our industry is performance based. We have a performance based industry, and those of us who participate in it, who are fans of it, who watch content creators in this space, we all know this is a performance based industry. And yeah, the way we perform when we don't take trades is as important as the way we perform when we do take trades. And I'm not saying that you completely busted and you're just sitting there, like staring at screens. But when you're not trading, take some time to paper trade. Take the time to just take those days off and take that pressure off financially and say, look, what I want to do is I want to go back to the craft. I'm going to go back to the craft, and I want to, as the one guy said, I want to continue to prove to myself the things that I am assuming about the market. Because our assumptions have every assumption that we have about the market, and if you traded any period of time, every assumption we have about the market has its mirror inverse. So, as we would imagine that, oh, yes, this looks, as we would say, oh, this looks bullish. Sometimes there is a mirror inverse of that, where you can look at the same price structure at the high of the market, at the high end of the market, and you look at the same price structure at the low end of the market, and they do look identical. They look very similar, but we have to understand where we are in price in order for us to not be confused um by the alignment or by the structure of candles. And I think that's just one of the things that I've been learning as I've been stepping away from um live streaming, is that that's a very important factor. So I hope you guys were able to make profit today. I hope you guys will have beautiful entries. I hope you had minimal drawdown. I hope that as soon as you entered, price began to move away from your entry smoothly and dynamically, right? And then I hope that as you're monitoring and managing your trades, I hope you remain calm, and I hope that you um, remain clear, that you continue to um, measure every significant area of interest, take it into account, look at its inverse, and I hope you guys are judging this thing accurately and wisely. Hey, I am Grady on the charts. I hope you guys have a great and wonderful day wherever you may be. Have a good one. Bye bye.